All right, everybody, we're back with another bull versus bear case video. This is a series I do where I have to explain the bull case, the bear case, and my overall thoughts on a company, but I got to tackle it in under 5 minutes. This was a very popular option I'm going to go over today in the comments. And remember, I utilize the comments to pick the next stock I'm going to go over in these videos. So make sure you like the video, subscribe to the channel, drop a comment down below. This week, I'm going to be going over Stella-Jones, which is a very underrated Canadian company, one that was dragged down due to falling lumber prices when, it might have not necessarily been exposed to the industries that were hit the hardest by falling lumber prices. So I'm going to dive in depth into the company, let you know my thoughts at the end. And remember, there's a whole ton of free resources down in the description, case studies, stock research, things like that. So head down below, grab those absolutely free, and let's get right into the video. So what is Stella-Jones? They are a lumber company, but they are not actually the lumber company, the typical definition of a lumber company you would think. This company has very low exposure to residential lumber, which is typically the most cyclical and the most price sensitive of them all. If we look to this chart here, we can see that the company has 54% of its revenue from utility poles, 27% to railroad ties, only 11% to residential lumber, and 5% to industrial products. So we can think of Stella-Jones as a infrastructure play in a way because it supplies companies with utility poles, utility companies expanding infrastructure, things like that, and it supplies a lot of the railroads with the railroad ties they need to make new tracks or routine maintenance on their old tracks. So the bull case for Stella-Jones would be this low exposure to residential lumber and the higher exposure to more critical infrastructure, especially on the railroad side of things. These railroads, regardless of the economic conditions, they consistently need to be doing routine maintenance on previous tracks, which does create a kind of consistent revenue stream from the railroad side of it. And this also comes into play with the utility poles, although they're a bit more cyclical in the fact that during economic drawdowns, there might be less infrastructure expansion and less demand for poles, but existing maintenance on those poles definitely needs to be utilized. Whereas on the residential lumber side of things, that has a lot to do with housing starts, renovations, things like that. It is very sensitive to the consumer, the overall economy, policy rates. So only 11% of the business being exposed to this segment. This makes it not as sensitive to that area of the business, unlike, a lot of lumber companies that have strong exposure to residential area of the business. So this is ultimately a tailwind for the company and does make revenue a bit more consistent. So the main bull case here is expanding infrastructure. This company provides, we're looking at, 80+% of the business being tied to critical infrastructure, which should allow earnings to grow in practically any environment. And if we go to a free cash flow per share chart here, we can see over the last 5 years, Stella-Jones has grown free cash flow per share by around 162%. So they've gone from around $2.13 all the way up to $5.59 over the last 5 years. And it does get even more impressive over a 10-year period, as it's gone from around 16.2 cents in free cash flow per share up to $5.59. So this is an impressive run for the company, and this is because it has exposure to those segments. So the bear case here, it would primarily be market saturation. So Stella-Jones owns a huge market share of the railroad ties, the utility poles, things like that, which does limit potential growth in the future because it does have such a large hold on that market share that it is more difficult for the company to grow at an outsized pace. In addition to this, although it is not exposed all that much to the residential side of things, it is still heavily exposed to lumber prices. Ultimately, this can end up impacting margins in the event of, say, skyrocketing lumber prices or even falling lumber prices. So those margins are going to be relatively inconsistent. If we do look at a chart of Stella-Jones's operating margins, they have been very consistent over the years. I mean, we look to this chart, they're pretty much back to operating margins that we witnessed in 2016. The only difficulty here is we can see a lot of peaks and a lot of lows. So this is ultimately going to impact the results of the company, and it can't really do anything about this. This is just the nature of the lumber industry. So the bear case would be that market saturation, volatile pricing, which ultimately leads to lower growth in the future. And if we do look to Stella-Jones' expected growth, we can see they're really, in 2025, they're expected to earn around $5.75 a share, 2026, $6.14, and 2027, $6.53. So this is a mid to high single digit growth rate, which is a relatively strong growth rate, but the only difficulty here is the stock price has kind of caught up with the undervaluation that it had for numerous years. So my overall thoughts, I do think this is a very solid hold for a lot of people who want exposure to this sector. I don't expect the crazy high growth rates that it achieved over the last 3-4 years here. When we look to overall valuations, it is trading at a slight discount to historical averages, so you're getting a bit of a bargain here. And I really don't think the company is all that bad of an opportunity at this point in time. I just don't see it as the slam dunk it was over the last 3 years. And overall, I just think this company, it's likely going to grow in line with its earnings, which is, that mid to high single digit growth rate. Whether that's a market beating growth rate, that's tough to say. So everybody, that's it for the video. Remember, head down below, like the video, subscribe to the channel, comment down below, let me know what stock you want me to go over next. Comments is 100% where I get the ideas for these videos. And in addition to this, you can win premium subscriptions. I do one at the end of every single month. So not only do you have the chance of me going over the stock you want me to look over, but you might win a free year into our premium platform as well. And as always, there's a ton of resources in the description below. You can grab those absolutely free. They're going to make you a better investor. And we'll see you next time for more great Canadian content.